videos on a card just cost me $1,200. Things are tough all over.
Your videos on card.
My car, CAR auto.
Oh.
This went out and that went out. Poor Queenie. Oh, poor Queenie.
It was able to transcript that whole thing? Patty?
I just got off the phone with him, and he is sending it back to us. All right. What's
So
that?
you're able to transcribe that whole thing?
I'm gonna
Okay.
check this over here.
Just transcribing or
Okay.
recording?
Oh, I was sending an email. I send emails, texts, everything like this.
And it transcribes you, it doesn't like, because my Android always like stops, it thinks I'm done.
I'm gonna check one thing
So it's
here.
always turning itself off when I try to transcribe stuff.
Well, this, I mean, this is designed to only pick up my voice, even if there's this loud all over the place. It just gets this, and I do it all
Is it an app?
nonstop.
Or is it just your
No, it's Siri.
Siri?
And I mean, all through when I'm driving, I'm sending texts, I'm sending emails, I'm just blah, 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 blah. I mean, you gotta be really careful, you gotta,
Right, no.
bad stuff comes out sometimes.
Yeah, I mean, I try to use, Android's version, it's actually Google's version of Siri.
Right.
And,
Yeah,
and it always just cuts me off. I start talking and then it just stops. Like,
somebody else told me that too. So many men don't have iPhones, I noticed that.
I just got an iPhone. It's great.
Isn't it great? Yeah, they're all great, but I mean, just the whole thing.
Well,
the
but not when I had a
Yeah.
Razor.
Razor.
Razor with it.
You're really dating
Yeah.
yourself.
Yeah, and this thing 100% better than that.
Yeah, I mean,
Oh,
I still know people with phones like that, and you just wonder why. And
Flip
then once
phones.
they get it, they're like, what was I thinking?
Yeah. And the pictures it takes, gorgeous.
We got, get all my guns out now.
Now, let me get that. Let me get some cutaways on
Yeah, I
that.
was just sending an email to the title company. I got 3 in escrow in the last 2 days.
You what?
3 in escrow in the last 2
Yeah,
days.
Oh, wow.
I get a few cutaways with your if you just look at the cutaways, I mean, I insert them. If you just look at Mr. Edward,
Sure.
like he's really
Yes.
interested, without talking to him.
Okay.
Yeah.
Just look at him and then,
Like I'm talking and you go, hey, you're
Yeah.
agreeing with me.
That makes sense.
yeah,
Yeah. Okay.
good, I can use that. Thank you. And now, Mr. Mark, just look like you're really intense. Yeah. Yeah, Edward. Hey, cool. We're gonna go to the Super Bowl? All right. And you're paying? Thanks, buddy. I can't even get him to laugh. Go ahead, make a laugh. Okay, thanks, guys.
All right.
You best.
Hello. What you got? Anything good? Any goodies?
Yeah. Oh, really? I mean, just, that still low inventory.
I like bringing charts and graphs for the radio audience.
Yeah,
Check this out.
When this guy's trying to get me to change the Dropbox to his whatever, and you use Dropbox?
I think so.
Oh, really?
Yeah.
Why?
I'm just not used to it, and
Oh,
I just,
okay.
yeah.
So someone pointed pointing me onto it, and I go, gosh, this is actually pretty good. I don't need like log me in as much, where you can log
Yeah, I don't
in
log
on
me in.
the computer, right?
I don't need that.
I rarely use it, but here I got a computer at home, and if I go out on vacation,
Oh, that's
if I save
why.
everything to Dropbox,
That's
then
it.
I can access wherever I'm at.
That's true.
Yeah, but this guy was saying that that one's been the most hacked thing, blah, blah, blah.
Yeah, no, that's I can see the value of Dropbox for that, for sure. The log me in is annoying.
Yeah, that's,
All right,
okay.
so,
So Patty, your question that we have is, when looking for a broker, should I ask how many current listings he or she
Sure.
has?
sure.
And Mark, can borrowers negotiate the interest rate in place with you?
Okay.
Okay. Are you ready, Mr. Kramer?
Mr. Kramer is ready.
He's always ready, because he is a professional. All right. Who's gonna start off?
I can.
Yeah,
Okay.
go ahead.
Yeah, sure. I've got some boring statistics that I'll
There you go.
spice up, liven up, and make
Yeah.
it exciting.
And I got a few little mention things here. I wanted to, I'll spread them out. Okay, here we go. Well, welcome. You're listening to The Best of Investing on Talk 910. I'm your host, Edward Brown, and I'm proud to have as my co-host Mark Hanf of Pacific Private Money, one of California's fastest growing mortgage investment firms, and Patti Cohen of Pacific Union Realty. Our phone number is 888-912-1190. Now you're going to use that number to answer the trivia questions for 3 vacations given away during this show. The vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. Those vacations are free. Their only request, a $75 cleaning fee to cover the housekeeping expenses. Today's trivia theme is party like it's 1999. Okay?
Which just seems like yesterday, but now it's like, what, 16 years ago?
Yeah, remember old Y2K, worry about that stuff?
That's right.
Let's see here. Our website is bestofinvesting.com, and check us out on television, Comcast Channel 26 at AT&T, Channel 99, Saturdays at noon, and Sundays at 6 p.m. Now, we don't have any special guests besides...
What do you mean?
Well, guests. We have special co-hosts.
Special
not guests.
co-hosts, yeah.
So, Mark, you're chomping at the bit there. What do you got?
Well, I got some exciting real estate statistics. I've got some sales statistics and some Case-Shiller graphs that are pretty cool that we'll share with the radio audience here. But, we're getting towards the tail end here of 2015. And so for those of you who might be wondering how the real estate market and sales are comparing to prior years, well, it looks like, at least for, let's just talk about the Northern California numbers. 2015 looks to beat out 2014 and 2013 in terms of total forecast sales. The forecast is we're going to end the year with about 210,000 units in Northern California. That compares to just under 214 and just a little hair over 213. Compare that to 2005 when 400,000 units sold in Northern California. So we're still at half the volume. And so if you look at, and I'm looking at a graph right now that goes all the way back to 96. So we're talking 20 years. And ever since the real estate crash in 2007 and 8, we have just been kind of bumping along. The graph, it's just a stark contrast from the 10 years prior and the 8 years since. We've just not been able to get back up to the monthly sales volume that used to average close to 40,000 units a month, and now we're down to about 20,000.
Okay, I'm going to guess a few different reasons. One, banks are just too tight on the money.
Absolutely.
There is not enough new inventory coming on the market, with construction. And people are a little skittish because they still remember the downfall, and they figured they would rent. What do you think?
Yeah. Part of, what you're talking about, why there's
why
no
the numbers
inventory.
are half? Why the 40,000?
Well, why is sales volume been basically stuck at a level that is less than half the 3 or 4 year peak before the crash? We've just not been able to get up to this same kind of unit sales volume
Right,
we've seen on an
so-
annual basis.
This is what I think, and it's funny because I have it right in front of me. Investors aren't flipping. The shadow inventory that banks supposedly have, they're not coming out.
Yeah.
Millennials are not buying. They're taking longer to buy. They're not seeing the value. They're living on their parents' couch. All those kinds of things. New construction is not happening.
It's not happening. No.
Yep. And the foreclosure pipeline is dry. And there's and repeat buyers people are back in before the crash, people were bragging about how much they overbid and all that. Now people are really looking at that real estate commission and saying, is it worth moving? And those, they're staying put. They're hunkering down. We've learned some lessons. And at the same time, they're not necessarily even remodeling. Some are, some not. Let's just remodel.
Yeah.
So that's kind of my take on what's going on.
Well, and one more thing, for as long as I've been a real estate investor, I've known that, or I've believed and been told that job growth and wages really drives real estate more than any other thing. And if you're looking back, we're supposedly 7 years into this recovery, but everything I read points towards wages being stuck on a CPI adjusted level of 2,000. That people aren't just, especially the middle class, the upper middle class, aren't making significantly more money. And when you have job growth or wage growth, wage growth that's essentially stagnant, because we're essentially fully employed right now, but wages have been stagnant, and those stagnant wages, I think, are also a factor in keeping unit sales down.
Yeah, I don't know if those are national or Bay Area, because Bay Area is an anomaly, really.
Well, it absolutely is. I've got another thing here from Kay Schiller that I saw today, and this was the first time I had seen this breakout of these graphs, and so I found a new website that I'm going to go back and revisit. And so we've been talking about how Kay Schiller, pretty much every month they release their national and then metro statistics, and in the San Francisco Bay Area, once again, year over year, August to August 2015, we're 10% higher. So we've been pretty much at a 10% appreciation rate for well over a year now. We keep wondering when that's going to start to go down, and it hasn't, at least as of August. And Kay Schiller is, they're a full 60 days behind in their statistics gathering. But I'm looking at a breakout in the San Francisco Bay Area. There's a graphical breakout of three types or three tiers of homes: homes over $1 million, homes from $500,000 to $1 million in value, and then homes under $500,000. And what was shocking to me was, well, we kind of know that, and we've talked about this in the San Francisco Bay Area. So at the height of or they use an index to gauge, like the CPI index. Yeah. So they use an index, and the Case-Shiller index at the height of the bubble in 2006-07 was, for homes over $1 million, was 184. Well, in August of 2015, that number is 216. So, which suggests that homes above $1 million have appreciated well beyond the prior bubble. So that's for homes over $1 million.
It's a lot of those tech people.
Right. So and that's one of the most active markets, particularly in Marin, San Francisco, the Silicon Valley.
Especially if interest rates are low.
So
I'm not even sure where you find a house under 500 or really under 7.
Well, this is the Greater Bay Area, so it's the San Francisco. They call this the five county couch metro area.
And they don't count condos, right? These are single family dwellings.
I am looking closely here, and I don't know if it includes condominiums. But let's just keep going, because this is interesting.
Gotcha. Okay.
So the index for homes over $1 million at the peak was 184. It's now 216, significantly higher. For homes between 500 and $1 million, at the very height of the peak, it was 219, and in August of 2015, 219. So they're saying that at the mid-level, the 500 to $1 million, we have now reached valuations that are equal to the peak. Now we go to the homes below 500,000, and you find homes like this, I guess, if you look carefully, in some of the outlying cities of the Bay Area. Well, at the peak in 2006-07, that index number was 270. Well, as of August of 2015, that number is 220, or 50 points below the previous bubble high. So on the low end, they're saying, or according to Case-Shiller's data, that we have not yet approached the high. And if you recall, I recall this, that outlying areas increased dramatically in values leading up to the bubble, and they also crashed heavily. Some of the largest depreciation in real estate prices, and I know of neighborhoods where we were getting valuations at a certain number in 2007, and then by 2011, that number was 75 to 80% less than that number. It was so artificially inflated.
Well, I guess what happened is, everybody got priced out of a certain area, and so it just
right. That's exactly it. The people who now could afford to buy a house, they were all buying homes in East Contra Costa County, and right, exactly, where they were building like crazy.
Gotcha. So. Okay. Before we get to our first commercial break here, I want to make a quick little mention here. You got to see my friend Willa. Isn't that a great name? Willa at the Seahorse Ranch in Half Moon Bay.
Nice.
So my wife's birthday was last week. Went down to Half Moon Bay. She said, "I want to go horseback riding on the beach." And actually, we got to do that.
That's lovely.
Yeah, the waves crashing and all that. Made sure the horse wasn't skittish around the water.
Did you trot or gallop?
No, it was just a kind of a nice, easy walking tour, which is good because I'm not a big horsey person. So anyway, it was a lovely, lovely time. My wife really enjoyed it. So check them out at seahorseranch.org, or go to their phone number, 650-726-9903. definitely a fun adventure to go horseback riding on the beach. Very cool. Okay, here is our first trivia question. We're talking about partying like it's 1999.
Prince.
Yeah, there you go. That's the answer. Next show. Okay. Starting in March of 1999, this little bug became a major headache to internet emailers around the world. What was this little pest called? Okay. The first caller with the correct answer is going to win a free 3-day, 2-night stay at the Lighthouse Resort. Call now, 888-912-1190 to answer that question. And don't touch that dial because we're going to be right back with the best of investing.
Nice. I know I forget
The
the
name
name.
of the bug, huh? I'll probably remember when I hear it because there was, back then, they made big deals out of, oh, the so-and-so bug.
Yeah. Actually, I just saw a film at the Novelli Film Festival, and there was a woman, she was like in her 90s now, that worked for the government all those years, and she is a pioneer programmer. She was one of the original programmers, and she's female. This was about female programmers. And literally, the word bug came because there was a bug in her computer.
Oh, that's funny. That's where it gets.
It was about a bug.
Really?
Yeah.
Okay.
Oh, bug, a real bug.
See, causing all that problem.
Yeah.
Hey, are you on TV?
You got any goodies you want to
Um,
do with it? Oh, the next one?
Yeah,
Okay, good.
pretty much like Pacific Union did a study about cash buyers and
Okay.
who's buying and
That's
what are they buying and all that. So I'm
Cool.
just like looking at it right now.
Nice.
It's just, it doesn't seem, I have to really get this down because it's not really nice anyway.
Take a couple of minutes. Absorb it, know it, speak it.
I know. Exactly.
I know I crammed this stuff. No, she's not.
Not ready yet? Okay.
She's gotta show prep. I know I did mine today. I read tons of blogs and they were all so boring. I'm going through and I'm looking at all the mortgage blogs and the economic blogs, and it's just all boring crap.
Is it boring crap?
Is it what?
Is it boring crap?
What?
That he's reading?
Oh, the economic stuff. I was looking
Well-
through the real estate, my favorite real estate blogs. Until I found these graphs and went, oh, that's really cool. I hadn't seen
I
that
think the
before.
people that listen to the financial stuff
Yeah.
are pretty savvy, but like, this is a good example, not selling myself, but tell them, I think the last week, there was a word like ad hoc or hawk ad, or ad hoc, and no one explained it, so that's where I take my time. I put it down what it means.
Oh, yeah.
Or CPI, a lot of people don't know that, but that's only really on television. I think the people on radio
The
are
radio.
savvy.
Oh, interesting.
Yeah.
Wow.
But on radio, they're going to listen if they already know something.
You know, if you want, we can go right into the email.
Yeah.
Okay, but- okay.
Do it.
You can-
Sorry.
That's okay.
And we can ask that question of should you ask an agent how many listens they
That's
have?
the email.
Go on.
Okay, here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hahn and Patti Cohen. I always have to look at you when I say it. Make sure I know them. You can't tell the players on a scorecard here. Okay, here was our first commercial trivia question break question. That's from the Department of the Redundancy Department. Starting in March of 1999, this little bug became a major headache to internet emailers around the world. What was this little pest called?
I was trying to remember a name because years ago we used to make a big deal about the names of these viruses. Nowadays they don't name them anymore. They just call them Trojan this or that. But was it Melissa?
Yes.
Oh my goodness.
Very
Wow.
good.
Look at that.
Wow, I'm impressed. Okay, so Patti, we have an email for you from a listener. It says, when looking for a broker, should I ask how many current listings he or she has? That's a good question.
It is a good question, and I think it's very difficult for consumers to select a good agent because everybody's saying they are number one and everybody's the best.
Yeah.
And how do you really know? And testimonials are, they can be a little jaded. So I get that question sometimes, and I know what they're really saying is, are you too busy for me?
That's how I would read that question.
Yeah. And sometimes a savvy person might think, are you even in the game? So they're hoping you don't have, if you say, some people say none, and they're not even in the game.
Yeah, or just like yes, I only have one listing.
I can give you
Yeah.
100% of my
Yeah,
attention.
Yeah, yeah.
that's because no one else will hire me.
Yeah. And I mean, I love the question, and part of it is, what's a lot? I mean,
Yeah.
yesterday I had 5 listings today, I have 2 because 3 just sold.
Good for you.
So I'm looking for listings.
Good for those sellers.
Yes, exactly.
Yeah.
One was in your neighborhood, but that's another story. So these days, people are not too busy because there's low inventory. We're taking the listings and we're selling them quickly. We are going into a period where the listings are going to stay on longer. And so, I mean, I think the peak in my career that I've ever carried was like 12 listings.
Okay.
Still, not too busy. Really not. It works.
That must have been fun.
Yeah, it
Well,
was
I can
crazy.
see that, because I'm sure not all the houses are the same. So, there's going to be specific buyers for these specific houses. If you have a house that's a really kind of an eccentric type of house, there's only going to be so much you can really do with that, right?
Yeah. Yeah, I mean, there's a lot of ways to spin it, and there's a lot of ways to be creative. And the truth is, 75% of it is pricing correctly.
Yeah.
And you really don't want to play the, chase down the market game of pricing, and that's the kiss of death. Because you end up, at the end of the day, even in a rising market, you end up with less in your pocket than had you started out with the correct price.
Gotcha.
But so it's a good question to ask, but there's a lot of other questions to ask too. Talk to some current sellers. I always ask them, how many houses have you sold in the last 6 months, in the last 12 months? Where were they? What were the price ranges? Can I talk to some of your sellers? How many buyers do you do? How many sellers do you do? Like, there's a lot of ways to ask, and I think consumers really should ask.
Well, yeah, because there's probably some sellers who say, yeah, that person, sold for me, but I don't think I'd use them again.
That's right.
Maybe they were a professional, or maybe it just took too long. Like you said, maybe they didn't price it right. I mean, you got to be like someone like yourself who clearly is number one. Is that with all of your expertise, like you said, pricing is so important. You can really tell a seller what realistically the price should be on the house.
Yeah, that's I think some of our biggest value is pricing correctly and negotiating. Because a lot of the other things we do, you can hire someone to do, but really promoting it in a way, being really creative, pricing and negotiating is what we do.
It's almost just immediately what I thought of was getting, let's say, a really high-priced, high-powered attorney who is known for really good negotiation or specific expertise. And it's like, now in your case, the commission normally is the same. Right? It's not like you're going to charge 10% and broker B is going to charge 6%.
That's exactly right.
But with attorneys, you can get someone who charges $800 an hour compared to $400 an hour. So it's actually a lot better in your situation where you can kind of get the best for the same price.
Exactly right, Edward. And another part of it too is it's such a game because unlike your example was attorney, take a roofer. You want to get a roof? Get a new roof. You don't even have to have an appointment. 4-room jump on your roof. They all give you a bid and they have to stick to it. In this case, there's agents that are desperate that, quote, buy the listing. Like your property that's worth $1.5 million, oh, I can get you $1.7 million or $1.8 million. Beware of that.
And the first thing I do is say, write me a check for that, and then you sell it.
Exactly. So far, you're the highest bidder.
Yeah.
Right? Yeah. Yeah. But everybody's jaded about their own home, so it's easy to fall for that. Especially if you think you have somebody competent, and the less experienced somebody is, I find that people find their level with an agent. Like new first-time buyers typically find new agents.
Well, it's interesting. It was I remember before we ever met you, there was a gentleman who we were thinking about selling our house, and we knew about what it was worth, but again, we had an idea. And this person actually, he did the opposite. He said that he gave us a price that was really, I don't want to say insulting, but it was like, really? I know our house is worth more than that. I'm thinking maybe his angle was if we signed the listing at that price, he'd get it sold in 10 minutes. And then he'd look like a hero, like, see, look how fast I sold your house.
Again, that's why it's difficult for consumers because not only is it hard to find an agent, but it's hard to price it correctly because it's not a science, and especially in the Bay Area where you can have a $5 million house and then one for $800 down the block, literally.
Well, and here's another thing is you got to deal with someone who's got a good reputation similar to yourself, because if someone has a bad reputation as an agent, then if other agents know that, they're going to say, you know what, that person, we'll never get a deal with that person.
Yeah.
Because of how they do business.
Yeah. And not to mention you could be in court someday, really.
Oh, good point.
Yeah.
Good point.
Patti, I have a question for you based on something
Sure.
you said at the beginning. are there so many seemingly number one agents? Is there like different measurements people are using? Because I do see
No.
like magazines and ads, and it's like number
Yeah.
one, number one, number one. Really? There's
Number
like
one in this neighborhood.
37
Yeah.
number one agents out
Yeah,
there.
number one in the price range, number one for this quarter, number one for this month,
Yeah.
and the people don't say it quite as much, but you know, back in the 80s and 90s, it was all like that was all it. I'm number one for the quarter, and you get the award for you sold one house, you know.
Yeah.
So really, you want to ask again. Back to questions you want to ask. You want to ask them. You know, how long have you been in business? Are you full time? Do you work as a team or do you have assistants? You know, you want to know that you're going to be dealing with that person because this is such a, people deal with me. They do not deal with my assistant. They deal with me because this is such a business that needs to, you need to be in it.
Gotcha. Give out your information in case people want to hire you or at least ask you questions.
Yeah, fine to ask questions. Wonderful to hire me. And I'm happy to answer any questions for any reason. And it's Patti Cohn, C-O-H-N, and I am at 415-722-4842, and I'm with Pacific Union Realtors.
Very good. And Mark, before we get to your question that we have, which will be very interesting for the audience because it discusses negotiating interest rates and points, which I think the audience would like
For
to hear.
private money alone.
For
absolutely.
private money alone. We want to make a quick little mention here for our friend Dr. Vadim, who does dental implants in San Francisco and San Jose, and he's doing a special deal for our clients or our listeners, $1,998 for implant and abutment and crown. He's doing that because he wants to attract new patients. So
That's a deal.
that's a pretty good deal. Give him a call at 415-992-5160. Leave a message because it is Saturday. They'll give you a call back on Monday. Tell them that the best of investing, you're listening to the radio show, and he had some kind of a special deal about implants, etc. And you can also check him out at www.smiledelightdental.com. That's Dr. Vadim. Okay, here's our second commercial break trivia question. Talking about partying like it's 1999. On May 3rd, 1999, the second strongest tornado in U.S. history struck what state? And it's not state of mind. Okay? All right, stay with us. You're listening to The Best of Investing. Oh, what you have to do is call 888-912-1190. If you're the first caller with the answer to that question, you're going to win one of the prizes. Okay? Stay with us. You're listening to The Best of Investing. We'll be right back.
I don't know, North Carolina, I'm not really sure. I remember I was at the Outer Banks
Tornado, you said?
that time.
Tornado.
Tornado Day.
Tornado. That was a good car.
Kansas.
Yeah,
Oh,
you're
Kansas.
you have a dog too.
I'll get you, my pretty, and your little dog, too. And Toto, too? Yes, and Tita, and Toto. Yeah, the little mutt, too.
Toto, weren't they a rock band?
Yeah, right. Oh, my goodness.
Toto? I thought that was Asia.
No.
Toto did Africa.
Yes. You know what's funny, though? I've got on Pandora, that's literally all I listen to is Asia radio. And I'm serious.
Yeah.
They have not just Asia, they have Pat Benatar and all that stuff.
Yeah, right.
I heard some songs that, I mean, I only knew about their first album, but I couldn't believe how many, like, fantastic songs they had. I mean, not just really good, like Boston has really good songs, but after the first album, you know, it's like kind of hit and miss. I couldn't believe Asia. From all these albums, it's just fantastic.
But weren't they like a super group? They were like made up of
Yeah, from Yes and Emerson,
Right,
Lake and
exactly.
Palmer. Is that what they call a supergroup?
Yeah, like Foreigner was a super group. People that were
Oh, really?
already accomplished musicians would get together and form a band.
Yeah, that's, you know, John Wetton and Jeffrey Downs, I think. I saw a YouTube though of them recently, like.
Really old.
Yeah, oh, voice is gone. And,
Oh, they can't hit the highs.
Yeah, it's sad. It's like when Huey Lewis, you know. Yeah, listen to him nowadays. It's sad.
Yeah, it's really scratchy. So we'll do my question, and then Patty, we can go into some of your goodies.
Yeah, sounds
Okay,
good.
Sounds good.
Sounds good to me, buddy. I'm filming the thing behind you.
That is?
Yeah.
That's just my use. That's my WeTransfer.
I was waiting for Steve
Yeah,
to
that's
take the
just-
clothes off or something.
Yeah, something changed. Okay, here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn and Patti Cohen. When we cut to the second commercial break, we asked this trivia question about 1999. On May 3rd, 1999, the second strongest tornado in U.S. history struck what state? Martin?
Kansas.
No. Patty, you have 49 states to go.
North Carolina.
No.
I don't think so.
Oklahoma, which is kind of a
Oklahoma.
normal, tornado type state.
Yeah.
Okay, so
Tornado.
okay, if you want a normal tornado, go to Oklahoma. That's what I've always said. Okay, Mark, we have a trivia question. We have a question from a listener. I'm guessing this person is probably a borrower, but doesn't have to be. It says, can borrowers negotiate the interest rates and points with you?
So my company, Pacific Private Money, based right here in the Bay Area, makes private money loans, also sometimes known as hard money loans, and not just to real estate investors, but also to consumers, to essentially anyone looking for fast, no nonsense, no fuss, no muss, oftentimes short-term financing. And we've been doing it in the Bay Area since 2008, and we've funded over 1,000 loans, totaling over $200 million. And in fact, our most popular loan product right now is our owner-occupied purchase bridge loan. And gosh, we must have gotten just this past week 4 or 5 deals in our pipeline that were people who are looking to buy a house before they sell their existing one, and they come to find out that a lot of people don't qualify for bank financing for that second home loan, and that's essentially what it is, because you're trying to buy the next house, the one you're going to move up or move down to before you sell the existing one.
And the bank says, listen, as soon as you sell your other house, you're free that portion of debt, and of course we'll refinance it.
Absolutely.
Yeah. So and we still do loans to people who buy fix and flip, and we still do seconds to people who have equity in their property and can't get a loan from the bank. But the bridge loan seems to be one of the most popular loan products that we see nowadays, thanks to the new Dodd-Frank lending restrictions, which has made it harder for banks to make loans. So anyway, the question was, when it comes to dealing with a private money loan broker or hard money loan broker, are the points and the interest rate they charge negotiable? Well, it certainly is at Pacific Private Money, and now it's negotiable within a certain narrow range, and I'll explain why. For example, the interest rate we charge is set in many ways by the market or the marketplace. So here in the Bay Area, there's a certain expectation of yield that people who invest in private notes, and we work with about 250 Bay Area individuals who enjoy making high yields on their savings by investing in our note products. And there's a general expectation of receiving somewhere between 8.5 to 9 or 10%. And so since we also add a small spread onto our notes, so we have to price our notes so that we can offer our investors somewhere between, and usually we're offering our investors between 9 and 9.5%. So we typically price our loans at, say, 9.9%. Now, that rate is negotiable. If someone says, well, can I get 9.5 or can I get 9 or can you do something in the 8s? Well, once it starts getting in the 8s, the list of people in our database who would be willing to invest in a note at an 8% yield to them, it gets smaller and smaller. Now you would think, well, 8% is a great rate. Why wouldn't they, jump at that? In fact, why wouldn't they jump at 7%? And the answer from me is, well, I really don't know the answer other than it's the psyche of the
Well, I don't think
investor.
it's that, but it's also, if I hold out a little bit longer, there'll probably be a deal out there for 9%.
Right. That's exactly right. So investors are looking at the loans we originate, and because we're fairly consistent in the pricing that we achieve, their expectation as well at Pacific Private Money, if I invest in one of their notes, I'm going to get a 9 to 9.5% yield. And so you're right, Edward. In fact, we've seen this where I tried to fund a loan for someone who I knew in business before, was a repeat borrower, and he said, I really want an 8% rate for this property that I want to refinance. And I said, well, let's see what I can do. And after 4 weeks, I was unsuccessful at finding an investor for him in that note at 8%. Everyone was saying, well, no, that's, you should have charged him too little. You should have gotten a 10% rate from him. So So the rate is semi-variable in that usually there's a little bit of wiggle room on our end, but at the end of the day, we still have to sell that loan to an individual investor. Or if it's going to be funded by our fund, we're trying to achieve a certain yield for our fund members as well. So again, we have to be careful at how we price our loans because we have to make sure we have the appropriate mix of loans between 9 and maybe 11%, so we can achieve the yield output that we do at the Pacific Private Money Fund, which right now is paying a little over 8% on an annualized basis.
That's
to its
after the
fund members.
fees, et cetera.
Right, exactly. So now on the points, the origination side, and if you hear the term points a lot and you're wondering what that means, a point is equal to 1%. So 1 point is 1%, and that's whenever you borrow money from a bank or elsewhere, they normally have origination fees, which are referred to as points. And so a bank loan might be 1 point, but at private loan originators, we're normally charging more than that, anywhere from 2 to 4, depending on the size of the loan. And that's the money that generally is kept by the broker. Most of the note rate goes to the investors, whether it's a fund or it's a individual investor. The origination fees is how the broker lives. It's how we pay our bills and have a business model that allows us to help people get capital, get loans when they can't get bank financing. So yes, we have the ability generally to, if someone comes to me with a loan and I quote them 3 points, well, can you do 2.5? Well, yeah, I can. Well, how about 2?
Yeah. Keep going.
Yeah. So, we have to make a decision as a business owner. Do I want to apply the resources of my business?
Exactly.
I have 8 employees and I have overhead, and we market and advertise, and we pay all kinds of fees, and we're subject to audit. And it's not inexpensive to run a company like ours, and the governmental agencies are always looking down our neck. So it's something that we have to price it so that we can stay in business.
Well, it's
but the
also
bottom line is there's always a little bit of wiggle room.
It's also the supply and demand. I mean, if you have all your resources being taken up by loans that are producing, 2.5 points, then somebody who asks for 2 points say, well, if your loan's just as good as somebody else's, I only have so much money to put out. I mean, there's always money to be had, but from a time standpoint, if they both loans have to close at the same time.
So if you're a borrower and you understand that the business model in the private lending industry consists of 2 aspects. There's the note rate, and then there are the fees. And the fees are generally what the broker lives off of, and the note rate is what the investors live off of. So there is a little wiggle room on both sides, but we turn down deals regularly because the borrower says, look, I'm not willing to pay more than 8% and 1 point. That's it. Great. Okay, good luck.
Yeah.
Best of luck to you.
A lot of times they come back to you saying, I just found out that I can't get that rate somewhere else.
Yeah, right,
Yes.
exactly.
Yeah.
So anyway, so for more information on if you're looking for short access to capital, quick, painless, friendly, albeit, it's a little bit pricey, we get it, but that's kind of the nature of the private money lending industry in California, in fact, in the United States today. But give us a call at Pacific Private Money. We're at 415-883-2150, or go to our website, which is pacificprivatemoney.com, and there's information about how to borrow, and if you're interested in how to make 8% on your money, there's information there as well.
Very good. Okay, we're going to cut to another commercial break. Before we do, want to make one more mention here. Brian Capehart, my friend at Pacific Trade Exchange. A lot of Pacifics around here.
Yes.
Pacific Trade Exchange. So it's a barter company, and if you've got goods and services that you maybe can't quite sell for cash, give him a call, and he'll tell you exactly how the barter system works. And it's been good for me for, going on 4 years now.
Really?
Yes.
I've been wanting to know more about that. We're going to talk.
Yeah, very good. So
Wow.
check them out at Pacific Trade Exchange, and get in touch with Brian Capehart. He'll explain all about it. I'm telling you, it's worked very, very well for yours truly. Okay, here's our third and final commercial break trivia question. What made its debut in Europe on January 1st of 1999? The first caller with the correct answer is going to win a free 3-day, 2-night stay at the Lighthouse Resort. 888-912-1190 to answer that question. We'll be right back. I wanted to get that right exactly at the 10-minute mark here.
Amazing how you navigate this air traffic controller.
Yes.
New
What about the
meeting.
10-minute mark?
I wanted to get it exactly on the 10-minute mark here, and then I'll tell you exactly what's tonight. It's a little easier for me to do the clock when I know exactly.
Oh, okay.
Well, before I'd cut it off at like 9:36 and trying to add, because it's not 60 seconds. It's not 100 seconds. It's a little harder.
Exactly.
Yeah.
It's like it's funny. I do these videos here, and you can see the light changing. It's kind of interesting.
I could really get behind abolishing daylight savings time. It makes no sense.
Yeah, I know. It's
horrible.
frustrating.
Somebody's got to get on that case. It should be
Yeah.
easy enough to do it.
Well,
Arizona
yeah.
doesn't do it.
No, that's true. Neither Hawaii doesn't do it either.
Yeah.
Yeah, I have. I brought my motorcycle today, so I made sure I got all my those nice.
Oh, yeah.
I'm gonna go.
Bundle up.
It was cold this morning.
Actually, the deal that I gave you guys, the Heather, and anyway, that was his neighborhood, and it was on Oakmont. Yeah.
Oh, you did
Yeah.
that deal.
So we were
What was
supporting
the
it.
What was the
It was-
sale price on
Oh, it was tiny. It was like $8.79 or something.
that? Yeah, for how many square feet?
A lot. I forgot, but it's a big house, totally original.
Oh, good. I want to use that as a comp when the tax man wants to,
They
you
won't.
know.
They won't. I know. I wouldn't mess around with that because they specifically go back after when prices go up. They go back to those people.
Yeah, I mean, I just want to make sure if they keep it, just a small increase, that Prop 8 thing that
You know.
they kill me on that.
I'm closing another one next week in your neighborhood too.
Oh, really?
Yep.
What address?
66 Oakmont. This was 114.
Wait a minute,
66.
60, is that the one that like doctor just totally Jekyll?
No, that's next door.
That's next door.
His name is Ron Ashley.
I don't know what his name
Yeah.
is, but
Just the way you made the voice, I was like, it's
Yeah.
perfect. This is my client.
there's this one house. The guy is just like, it's a really pretty house, and they keep the pool on nice.
Yeah.
But it's weird. They just haven't done anything with it.
Right.
What's
He
it- what's
told me
next
the
to that
story
one?
on it. I forget. It's
Okay.
right next door. And he owns one on the other side too. But he told me the whole story, and I kind of forget details. But,
Okay, this is a long segment. 15 minutes.
yeah, I got something on the.
Okay,
Good.
All right, here we go. Welcome back to the best of investing. Last time for today, not because I'm dying or anything, but because this is our last segment for the day. I'm Edward Brown, your host, along with Mark Hahn, president of Pacific Private Money, California's fastest growing mortgage investment firm, and Patti Cohen, #1 real estate agent for Pacific Union Realty. But I mean, you're #1 in Marin.
Not in Marin, but I mean, depends where we're measuring.
You're #1 in
Listing
my
agent.
heart.
That's
Okay,
right.
That's even better.
right.
Here is our third and final trivia question. What made its debut in Europe on January 1st, 1999?
Can you give us a hint?
No.
Just a what?
What made its debut? Imagine, okay, it's January 1st, so it's...
Of 99?
Yeah. But didn't you say...
Euro dollar?
Yes, the
Yeah.
euro.
There you go.
Very good.
Yeah.
Good
All right,
guess.
Patty, you've got a couple of things for us.
Yeah, I mean, I just wanted to talk about, in general, what's going on in the market. Fourth quarter kicked off, and in every single county in the Bay Area, except for Napa and Marin, inventory was down yet over September. That's a really strong indicator because, usually in the fourth quarter is when inventory starts piling up, and things don't sell, it takes longer and all that. So that's one thing. And also, we've got the median sales price hit a high mark throughout the Bay Area, and it's particularly in Marin and Napa for, in general. And then, yeah, go ahead.
I was going to say, what was that high mark?
Well, it's past the peak, and everybody's past the peak.
Which
And,
was...
well, the
million, I mean...
Well, the average, I do the statistics for the IJ every Tuesday, and the average in Marin is pretty much like 1.3, and
Wow.
1.1 is the median.
Wow.
I mean, actually, 2 weeks ago, we had I think a $14 million sale, and in Marin, the average price was 2.2 for that, just for that week.
Because,
Right, because if you've got a whole bunch of sales on the high end, right, that's pulling up the median.
Yeah, of course, so we take it with a grain of salt.
Mean, mode, and medium.
Yeah,
there you
exactly.
go. Which one?
So it's good to look at the median, see what trading, and it's also important to be careful when people talk median and what it was, say, last year. Well, things are seasonal. Like
Yeah.
people are move-up buyers, and one thing that Pacific Union looked at, we did a study, of the first half of the year, and we just polled all of our agents and said, okay, what's actually going on out there? And one thing that came out of it was the cash buyers. Who are these cash buyers? What are they buying and all that?
Yeah.
And so we looked at all the 9 Bay Area counties and for the first half of the year, and this is some of the stuff we came up with. 2/3 of these cash buyers are buying it as a primary residence.
Wow.
So it used to be, I remember at one point we had like 40% were cash buyers, and most were investors, and that's
Yes,
not the
yeah,
case.
exactly.
Yeah, and part of it, not necessarily that there's so much cash out there. It's more like I have to do this to compete, and then they might put on a loan on it later as a write-off. So
Well, a lot of times, like Mark was saying before, that some of his investor borrowers will put an all-cash offer in. They never intend to pay all cash, but Mark can work so quickly with a loan that it looks like an all-cash offer
Yep.
from that end.
right into the escrow bloodstream. Yep, real quick. And Mark does move very fast and very efficiently, for sure. So another thing that we found out as well, 60% of the buyers that purchased with cash purchased a primary residence. So I would think many of them are probably going to get a loan on it. It just makes sense.
Yeah.
And the thought was that there was a lot of tech buyers, a lot of foreign buyers with the cash, and that's not exactly what happened.
I wonder how many people are thinking that the government's going to get rid of the deduction.
I can't imagine
I
that
mean,
happening.
that'll just be a huge downfall for real estate again.
Again,
I don't think they'll do that.
Well, you
I
made
can't
a,
imagine
you
it.
made an interesting point. I think that's worth revisiting, Patty, and that is that the median price is the price that the newspapers always, every month they say, oh, the median price is, it's 1.1 million or 1.3 million, and the median year over year, or changing from month to month, doesn't necessarily mean that your house went up by that same percentage or that increased in that value, although housing prices, as we know, in the Bay Area have generally gone up. But the median really is you'll have to look, behind the numbers, and the median really tells you that half of the sales were above that price and half of the sales were below that price. So it starts to tell you where the housing market is heading. So meaning that are more higher priced homes selling in that particular period versus lower priced homes. So I know certainly as the real estate markets were recovering, a lot of the transactions, and particularly people who were buying foreclosures for investment purposes, there was a lot of activity trading in the lower end of the market, which kept the median price down. Well,
Exactly.
after we went through all that foreclosure inventory, and now we're seeing the effect, the dot-com effect, the tech effect of people with money and paying cash and buying up homes, and the higher end of the homes moving as quickly as they have. That's really boosted the median price up. But it's perplexing to the average person who I don't believe, it's never explained in the newspaper, what that median price really means, and it's more of a meaningful number for people in real estate, in the business of real estate, than I think it is for the consumers. I think if you can actually come up with a true weighted average valuation or price per square foot that homes are selling for in your particular area, I think that'd be much more meaningful. But again, probably too much information and too hard for most writers at the local paper to come up with every month.
Well, we are in a very sophisticated market, and I'm guessing most people, the vast majority of people, get the distinction between average and median. It's pretty simple. And the point I was making is that the median is seasonal, in not necessarily that prices are going up or down, but that during the winter, lower pricer homes sell, more condos sell during the winter. In the
Gotcha.
spring and summer, more higher price home sales, just because it's seasonal and who's buying and what they're looking at, But it is really stupid to go by an average. And I don't think people really do that. And the best we have really is median. And then price per square foot is tough also because, you can get a neighborhood, in a certain neighborhood, it could go anywhere from like $250 to $1,200 a square foot.
Absolutely.
Yeah.
There's wide ranges. I mean, you take like Ross, for example, you could,
Oh, yeah.
it's that nutty.
It's that crazy.
Yeah.
I'm going to shift gears for just a minute
Yeah.
if I could. Mark, I like to ask you once a week. You have a deal of the week for us?
Well, As a matter of fact, didn't we send you one recently? to
You
take a look
did,
at?
the Auburn one.
Right, right.
Yeah.
And do you recall what the story was behind that
The,
particular client?
yeah, it's a situation where it's good FICO score, good income, but again, they haven't sold the other house yet, so they want to buy this one.
Another bridge loan scenario where they want to buy a home, a beautiful home.
Oh, it's gorgeous.
Before they sell their
Six
existing
house.
home. So we have a program called an 11-month bridge loan, and it's 11 months because we need loans for under a year still enjoy certain exemptions from some of these really onerous Dodd-Frank regulations, and so we've been utilizing this product for the last couple of years with the new regulations and helping people to get a fast, low documentation, easy to qualify for a purchase money loan in situations where they want to buy first and sell then at their leisure. And there's other reasons why someone might want to buy first and sell later, because they might want to buy first, move into that house, and then go back and remodel the home that they were in before, and then that way they can achieve top dollar for it. I've even done
That's a good point.
transactions for people who have bought their target home and then remodeled that home before moving in, moved in, then remodeled the home they moved out of. So again, especially contractors do that a lot.
Yeah, because they can get a good price on the new target home if it's in need of remodel.
Exactly.
Yeah.
So,
And a lot of people do not want to be involved in the sales process, so they'll move out and stage it and move on.
So again, if you're a real estate professional out there, a realtor, or in the mortgage business, and you're not familiar with these fast and easy bridge loans that are available, again, not from every private or hard money loan broker, because you have to have certain licensing. You have to be NMLS licensed, and not every private money loan originator has that. Plus, it's a consumer loan, and again, consumer loan transactions are much more highly regulated, and there's trade compliance and other types of things you have to look out for. So again, for more information on fast, no nonsense, no fuss, no muss, as we like to say, bridge financing for your clients, if you have a transaction that looks like it's maybe not going to go through because the bank financing isn't coming through, give us a call at Pacific Private Money. It's 415-883-2150.
So someday I'm going to ask you a question about bridge financing, and you're actually going to finance a bridge.
Absolutely.
No,
Well,
bridge.
as long as we can get title on it.
Yeah, that's right. That'll be a bridge, sure.
And then I'll sell you the Brooklyn Bridge.
That's right. Yeah, really. Well, this Auburn deal. I mean, this house. I have to show you the pictures. It's only about 10 years old, I think, but it looks brand new, and it's just phenomenal. I would love to live there. And the purchase price is $800,000, and we're doing a first mortgage of $450,000.
You can buy a castle in Auburn for
Yeah.
$1,000. Yeah, absolutely.
56% loan to value, and
$800,000.
I hope
I gotta see that. I know, exactly.
Never gonna
Please
happen.
don't pay me. No, that was a big one.
Another interesting little tidbit while we're still talking real estate here is that 2 months ago, 60% of those polled, and these were mostly economists, were predicting that the Fed would raise interest rates before year end. Last month, that number increased to 70, and this week, 92%
Oh, wow.
of economists believe that the Fed in December is going to have the first rate increase of short-term rates in 7 years.
And hasn't the Fed chairman hinted at that also?
Well, that's probably why 92%. They don't show all their cards.
Right,
Didn't he say he was gonna?
Well,
and the question is, how much?
That's exactly right. Will it be a token quarter percent, or will it be a?
They don't like to raise a half. That's kind of, especially if you're at rates so low now. When interest rates are at 12% and you go a half, no big deal.
Yeah.
But if you're 2 or 3 and then you go a half, that's a big deal.
Well, the prime rate's been at 3 1/4 now for that same amount of time, and that's an index that's used by a lot of variable interest rate loans, and people with variable interest rate loans have been enjoying low rates for a long time. So that's going to start to have a ripple effect through the economy and make a difference. Maybe not the first quarter percent, but certainly once it starts, we don't know when it's going to stop.
Yeah,
are we going to see prime rates in the 6 to 8% range? Which, if you go back, 20, 30, 40 years. That was the average
Yeah.
Yeah.
between 6 and 8%.
Well, the crazy thing is some of these banks now are. I remember not too long ago when you could get prime minus, and now they're going to prime plus. So
Right. If you got a variable rate loan with an index, the spread has increased on a lot of these loans. So where it used to be prime plus 1, now you're in a loan that's prime plus 4, and you're still maybe paying a nice rate. But once that prime starts to go up, then you definitely have to go back to the bank and refinance into a better spread program.
are the banks telling us that they're not making enough money? I guess just handing money over to the Fed for an overnight rate is, they're working on BIPs. as they say.
Well, I've heard it said that the banks have made better profits in this low interest rate environment than ever before because their cost of funds are so close to zero. They don't pay the prime rate, and they're lending it out in the high 3s to low 4s.
Well, and
the spread is big for them.
And I'm going to guess also that there are not too many defaults right now, and so they don't have to have a bunch of big reserves, which hit the bottom line.
True.
Right.
Very true.
Banking 101,
Yeah.
as they say. What do they lend out at, like 16 to 1 or something ridiculous?
Right.
I want to do that.
Yeah, exactly.
But something else to expect in mortgage rates, there will be an immediate bump in mortgage rates that will follow the announcement of that first rate increase. But what many don't realize is that mortgage rates are based on long-term rates, not short-term rates. So there'll be a little bit of a spook effect that will just happen naturally where we'll start to see 4% mortgage rates maybe go to 4 1/8 or 4 1/4, but it's possible that they might actually slide back down again in the ensuing weeks and months because it really depends on what the 10-year rate does. And the 10-year rate is not necessarily influenced very strongly by short-term rates. There's a lot of other factors.
Well, I wonder what will happen to bond prices if they'll get spooked
Yeah.
on that too.
Yeah.
Patty, real quickly, give out your information one more time. If people want to ask questions about
Real estate,
listing,
anything,
yeah.
buying, selling, whatever. Patti Cohn, C-O-H-N, I'm with Pacific Union, and my phone number is 415-722-4842.
Great. And you can reach Mark Hunt at 88415-883-2150. I got that one memorized.
Yay.
Okay, thoughts for the day. Mark Twain said, "Don't go around saying the world owes you a living. The world owes you nothing. It was here first." And Winston Churchill said, "Don't worry about avoiding temptation. As you grow older, it will avoid you." Tune in next week to The Best of Investing. Love that guy. We're going to be giving away more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
That was great. That was good. They love me too.
Yeah, we know.
Marcus Twain.
That was fun.
Winston Churchill.